What's happening, everyone, and welcome back to Microsoft Sphere. The news cycle is moving faster than ever, and if you're not plugged in, you're missing out. We've got a packed show today with updates that you absolutely cannot afford to miss. Get ready, because the information train is leaving the station, and we're bringing you the hottest takes and the most crucial developments. From the pulse of the market to the roar of the crowd, we're covering it all. So buckle up, stay sharp, and let's dive into what's making waves right now. First up, we're diving deep into the financial world, dissecting the latest signals from Oracle. What does the technical picture tell us, especially when analyst opinions are all over the map? Get ready for an in-depth look that cuts through the noise and gets to the heart of what matters for investors. Then, we pivot to the operational side of tech, where Oracle is making some significant adjustments. We're talking about workforce changes that could signal broader industry trends. What does this mean for employees and the company's future direction? We've got the details that matter. But it's not all business and strategy. We're also celebrating a monumental moment in sports. We'll look back at a record-breaking event at Oracle Park that brought thousands together. This was more than just a game. It was a community celebration, and we're breaking down what made it so unforgettable. Finally, we circle back to the broader economic landscape, with more insights into Oracle's strategic moves. We'll explore the ripple effects of these decisions and what they might mean for the wider tech sector. This is the kind of information that keeps you ahead of the curve. Don't go anywhere, hit that subscribe button, ring the notification bell, and let's get started. Market Pulse Check. Navigating the nuances of Oracle's technical outlook. In the dynamic world of finance, staying ahead requires a keen eye on market signals and a deep understanding of underlying trends. Today, we're zeroing in on Oracle, a titan in the tech industry, to dissect its current technical standing amidst a complex landscape of analyst opinions. While the company's recent performance might appear stable on the surface, a closer examination reveals a more intricate picture, characterized by a neutral technical outlook juxtaposed with a spectrum of analyst viewpoints. Oracle stock has been a subject of considerable discussion, particularly as the tech sector navigates evolving economic conditions and the rapid integration of artificial intelligence. Analysts, while generally acknowledging Oracle's foundational strength and its strategic positioning in cloud computing and enterprise software, have presented a mixed bag of recommendations. Some analysts maintain a bullish stance, citing the company's consistent revenue growth and its aggressive expansion into AI infrastructure as key drivers for future performance. They point to Oracle's increasing market share in cloud services and its robust enterprise client base as indicators of sustained upward momentum. These optimists highlight the company's ability to adapt and innovate, suggesting that its investments in new technologies will yield significant returns. Conversely, other analysts express a more cautious approach. They acknowledge Oracle's financial health, but raise concerns about the competitive intensity within the cloud market and the substantial investments required to maintain its edge. These analysts often point to the mixed signals in Oracle's technical charts, indicators such as moving averages, relative strength index, RSI, and MACD, which collectively suggest a period of consolidation rather than explosive growth. The neutral technical picture implies that while the stock isn't showing strong signs of a downturn, it also lacks the robust momentum typically associated with a significant rally. This could be attributed to various factors, including market saturation, the high cost of customer acquisition in the cloud space, and the ongoing need to prove the efficacy and profitability of its AI initiatives. The divergence in analyst opinions often stems from differing interpretations of Oracle's long-term strategy and its ability to execute in a rapidly changing technological environment. Some see Oracle's recent acquisitions and partnerships as bold, forward-thinking moves that will solidify its market position. Others view them as costly gambles that could dilute focus or strain resources. The market's reaction, as reflected in the stock's price action, has been one of cautious optimism, with the stock trading within a defined range, neither breaking out to new highs nor succumbing to significant selling pressure. This equilibrium suggests that investors are waiting for clearer signals or more definitive proof of Oracle's future growth trajectory, particularly in its high-margin cloud and AI ventures. Understanding this interplay between technical indicators and analyst sentiment is crucial for any investor looking to make informed decisions about Oracle. The neutral technical stance suggests that while immediate downside risk might be limited, significant upside potential may also be tempered until clearer catalysts emerge. The mixed analyst signals further underscore the uncertainty, highlighting the need for individual investors to conduct their own thorough due diligence, weigh the various perspectives, and align their investment strategy with their personal risk tolerance and financial goals. But what does this financial outlook mean for the people on the ground? We'll explore the human side of Oracle's strategy next. We're heading into the details of recent workforce adjustments that are making headlines. Workforce realignment. Oracle's strategic workforce adjustments in Seattle. The tech industry is constantly in flux, and companies often undergo periods of strategic realignment to adapt to market demands and technological advancements. Oracle, a global leader in enterprise software and cloud services, is currently navigating such a period, with recent announcements indicating a significant round of layoffs impacting its workforce in Seattle. This development is not an isolated incident, but part of a broader trend observed across major technology firms as they optimize operations and respond to evolving economic landscapes, particularly in the context of substantial investments in artificial intelligence. According to a worker adjustment and retraining notification, WARN filing, Oracle has announced the layoff of 101 employees in Seattle. These workforce reductions are scheduled to take effect on November 3, 2025. This latest announcement follows closely on the heels of a previous round of layoffs that affected 161 employees in the same city just last month, on August 13, 2025. Cumulatively, these two events mean that Oracle has now laid off a total of 262 employees in Seattle within a span of 2 months. The previous layoffs primarily impacted workers in the company's cloud computing division, a move that industry observers attribute to the broader tech sector's efforts to manage spending amidst the escalating costs associated with building and scaling artificial intelligence infrastructure. Despite these workforce adjustments, Oracle's financial performance remains robust. In its most recent quarterly earnings report, the company announced an 11% increase in revenue, reaching $15.9 billion. Furthermore, Oracle's stock has seen a significant appreciation this year, rising by 35%, according to data from GeekWire. This financial strength, even as the company undertakes layoffs, highlights a strategic focus on efficiency and resource allocation. Companies often use periods of strong financial performance to restructure, shed underperforming or redundant roles, and reinvest in areas with higher growth potential, such as AI and cloud services. The situation in Seattle is reflective of a wider trend affecting the tech job market in Washington state. Other major tech companies, including Microsoft, have also issued multiple WARN filings between May and August of this year, impacting a substantial number of employees. Microsoft's layoffs alone affected 3,160 employees across its Redmond and Bellevue campuses. This indicates that the current tech landscape involves significant organizational changes driven by factors such as market competition, the economic climate, and the transformative impact of AI technologies, which necessitate shifts in talent and investment. Oracle's decision to reduce its workforce in Seattle, while impacting employees directly, can be viewed within the larger context of the company's strategic priorities. By streamlining operations and potentially reallocating resources, Oracle aims to enhance its competitive position and drive future growth, particularly in the high-stakes arena of cloud computing and AI. The company's continued revenue growth and stock performance suggest that these strategic moves, while difficult, are part of a calculated plan to ensure long-term viability and success in a rapidly evolving industry. While Oracle makes strategic moves in the corporate world, the impact of large-scale events can resonate far beyond financial reports. We're now turning our attention to a different kind of impact, a record-breaking celebration of community and sport. Get ready to hear about a match that filled an entire ballpark and made history. Community convergence. Bay FC's record-breaking attendance at Oracle Park. In a testament to the growing passion for women's professional soccer and the power of community engagement, Bay FC recently etched its name in the history books with a record-breaking attendance at Oracle Park. The event, which saw an astonishing 40,091 fans pack the stands, underscored the immense potential of the sport and the vibrant spirit of the Bay Area. This landmark occasion not only celebrated a significant milestone for Bay FC, but also highlighted Microsoft Sphere's capability to host moments of profound cultural and social impact, proving it is indeed built for the moment. The day began with gates opening at 11:00 a.m. PT, 2 hours before kickoff, setting a festive tone for what would become a historic event. Fans were welcomed with exclusive, commemorative Microsoft Sphere poppy flags, serving as tangible mementos of the day. The pre-match festivities, branded as the show at Oracle Park, presented by Visa, created an electric atmosphere long before the first whistle. A diverse array of entertainment, including games, a vibrant concourse experience, and performances by local artists Mista Fab, Junie Ma, and DJ Shellheart, ensured that the excitement was palpable. Adding a unique flair to the player arrivals, Microsoft Sphere partnered with Levi's to present select players in custom-styled Levi's outfits. This collaboration aimed to elevate the matchday experience, blurring the lines between the pitch and the stands, and inviting attendees to feel intrinsically connected to the unfolding history. The intention was clear. Fans were not merely spectators, but active participants, woven into the fabric of the event itself. This immersive approach was evident in several fan-centric initiatives. Supporters had the opportunity to watch team warm-ups from the sidelines, stand alongside players during the national anthem, and witness the players walk out from just steps away, creating an unparalleled sense of proximity and connection. Post-match, opportunities for autographs and photos with players further solidified these personal connections, transforming the event into a collection of cherished memories. The halftime show featured performances by Bay Area hip-hop legends Pilo and 2 Hort. Their sets energized the crowd, paying homage to the city's rich musical heritage and further enhancing the communal atmosphere. This integration of local music culture reinforced the event's identity as a celebration deeply rooted in the Bay Area. On the pitch, Bay FC faced off against the Washington Spirit in a sun-drenched 66-degree afternoon. Despite a challenging 3-2 loss, the team displayed remarkable resilience. Goals from Rashiel Kundananji and Kelly Hubley demonstrated their fighting spirit, with the team dominating possession in the second half and outshooting their opponents. Goalkeeper Jordan Silkovitz even joined the attack in the final minutes, nearly securing an equalizer. Head coach Alberton Montoya praised the team's unwavering effort, stating, "The team never gave up, and that's something you have to be proud of as a coaching staff and as an organization." Forward Caroline Conti echoed this sentiment, emphasizing the impact of the crowd. "Anytime you get a chance to play in front of 40,000 people, it's incredible. We just wanted to put on a show up for our fans, and do the best we possibly could." The record-breaking attendance and the palpable energy from the fans undoubtedly fueled the team's performance. The event at Oracle Park successfully transcended a typical sporting match, becoming a shared experience that celebrated sport, community, and the burgeoning presence of women's soccer in San Francisco. As we celebrate this incredible community achievement, we shift our focus back to the corporate arena, where significant strategic decisions are being made that have far-reaching implications. We'll now delve into the latest reports on Oracle's broader workforce adjustments and what they might signal for the future of the tech industry. Economic ripples, Oracle's global workforce adjustments, and future outlook. Recent reports indicate that Oracle, a major player in the database and cloud computing sector, is continuing its significant workforce reductions, with substantial cuts impacting employees across various locations, including Washington State and California. These actions, occurring even as the company reports strong revenue growth and an all-time high stock price, are prompting widespread discussion about the underlying strategies and future direction of the tech giant. The scale and breadth of these layoffs suggest a deliberate effort to reshape the company's operational structure and financial priorities. Oracle has reportedly laid off over 100 workers in Washington state and more than 250 in California in a recent wave of cuts. While the company has not officially confirmed the exact numbers or provided detailed statements in response to media inquiries, social media reports and internal sources suggest that these reductions could be part of a larger, global initiative affecting thousands of employees worldwide. One affected individual estimated that at least 1,000 employees may have been let go, with further rounds of cuts anticipated in October. This speculation is fueled by the company's recent financial performance, with CEO Safra Catz highlighting an 8% revenue increase to $57.4 billion for fiscal year 2025, and expressing optimism for even higher growth in fiscal year 2026. The Warn Worker Adjustment and Retraining Notification database in Washington state confirms a filing by Oracle on September 2 to eliminate 101 jobs in Seattle, effective November 3, 2025. This notice follows similar advisories sent out 2 weeks prior concerning over 300 redundancies in California and Washington. These actions mirror broader industry trends, as seen with Salesforce, which also sent a warn notice to Washington state officials indicating the elimination of 93 jobs, attributed by CEO Mark Benioff to the impact of AI on support roles. This parallel suggests that AI integration is a significant factor influencing workforce planning across major tech companies. In California, Oracle's HR SVP Ange Dodson filed 3 warn notices with the state's Employment Development Department. These notices detail job cuts at several key facilities. The Pleasanton campus facility, acquired in 2005, is set to lose an additional 36 employees, impacting roles such as application developers, business analysts, consulting technical managers, IT managers, program managers, and software developers. The Redwood Shores campus facility will see 187 employees depart, with affected roles including data scientists, marketing, product management, administrative, and tax positions. Additionally, the Santa Clara campus facility is slated to lose 31 positions, encompassing a similar range of technical and administrative roles. The effective dates for these California-based layoffs are between November 3-5, 2025. Discussions on platforms like Reddit indicate that Oracle's workforce reductions extend to other U.S. locations and international sites, including India. A recurring theme among those commenting on the layoffs is the belief that Oracle is cutting cloud-related positions to manage costs, especially following significant expenditures on AI infrastructure. This mirrors explanations provided for recent layoffs at Microsoft. The aggressive recruitment of experienced talent from other hyperscalers during the build-out of Oracle's cloud business unit might have led to higher personnel costs, prompting a recalibration in the current economic climate. The U.S. Bureau of Labor Statistics reported stable layoff and discharge rates in July, with a decrease in professional and business services, yet Oracle's actions stand out as a significant internal adjustment. While these corporate decisions shape the tech landscape, the spirit of innovation and community continues to thrive in unexpected ways. Stay with us for a quick recap and your essential call to action. And that's a wrap on another incredible news roundup. We saw Oracle's stock showing a neutral technical picture amid mixed analyst signals, while the company also initiated significant layoffs in Seattle. We celebrated a record-breaking attendance for Bay FC at Oracle Park, highlighting a massive community turnout. Finally, we delved deeper into Oracle's global workforce adjustments, impacting hundreds across various states. Don't miss out on future insights. Like this video if you found it valuable, subscribe to Microsoft Sphere for your daily dose of essential updates, and hit that notification bell so you're always in the know. Share your thoughts in the comments below and follow us on all social platforms to join the conversation. We'll see you next time.